Good morning, Armor Insiders. Welcome to everybody joining us on Open Mic Wednesday. We're going to talk about Armor Investing Way, our positions. We're going to go over top stocks to watch, changes to our portfolio. We have our flagship fund. I'll go over how we're adjusting that today. Top stocks to buy in the portfolio, things we're adding to our whiteboard. So where are we in the cycle and what are our next steps? We're going to go over all of that. Before I dive in, remember, we look at this as a virtual hedge fund. So you have to think of yourself as a portfolio manager on the desk. Your job is to take in information, figure out how it works for you, your risk tolerance, your goals, your strategy, execute that. And you have to be the smart money. Nobody can do that for you. Okay. So we're going to dive in first. We recognize here on this desk that we have to be on the right side of probabilities when rewards worth risk. We got to do it over and over again. The first step in doing that correctly is figuring out where you are in the swing cycle of the market in general. 8 out of 10 stocks follow the market. So you have to be at the right part of the swing cycle when you're taking new investments. So let's go over where we are right now. We'll get to this chart in a minute. This is our highlighted stock of the day. That's MSOS. We're going to jump on the cannabis couch. Haven't been here in a while, but it's going to be fun. Before we get to the fun, the festivities, we have to look at the indexes. Okay? So step one when it comes to managing capital is getting your capital to work as soon as you see institutional flows of capital moving into the markets. We use the risk monitor for that. 10 indexes. When all 10 indexes are moving in the same direction, we recognize there's only one animal that can do that, and that is the elephant of institutions. And when they're parading towards the watering hole, we want to get there first. And so we have 10 indexes. S&P weighted and unweighted, NASDAQ weighted and unweighted, small cap index, the Dow, the momentum index, treasury bonds, got to keep our eye on treasury bonds, the IBD 50, you could substitute or at the same time use ARC Innovation. So IBD 50 and ARC Innovation are your innovative growth stocks. And then we round it out with Bitcoin. Those 10 show us the direction of the market. So let's see where we are in the cycle now before we talk about what stocks to buy today, what stocks to watch today. None of that matters if you don't know where you are in the cycle. Okay, so let's start there. Risk monitor for us, which is a simple guide to how those 10 indexes are behaving. We went green here on the 24th of April. That's the dark green box. We've been risk monitor green all the way up with a couple of follow-on buy points, which are the light green boxes. We're on swing trade number 23 for our triple index swing trading strategy. That's SPXL. So that strategy has been going on for, it's actually 32 months now. We're up over 145%. All we do is trade triple the S&P for this strategy. Every time we get the risk on entry point, 100% of the portfolio gets put to work. The average holding period is 9 days, and we're in day 10 now, or 9.5, because we had that half a day leading into 4th of July. Okay, the average holding period is 9 days. So we're right in that average holding period. And the simple stop strategy at this point is just raising the stop to the low of 2 days ago. So the low of Monday is now the stop. We hit that. We book a profit on trade number 23. We go back into treasury bills and we wait for the next trade number 24. So we're up over 145%. That does not include the interest we collect while we're sitting in treasury bills waiting for the next trade. That's just pure trading profit. Okay. So The importance of the risk monitor and this strategy is to see where we are in the cycle. And I submit to you that when you're 10 days into a follow-on buy point, that's not the time to run out there and put a whole bunch of new stocks in the portfolio. It's not. Now's the time to manage risk, book profits at targets. You can rotate positions. Just yesterday, as an example, we booked a profit on CrowdStrike, and we rotated that capital into Fortinet. Okay, so that's two cybersecurity companies. One hitting the target, the other not yet breaking out of a perfect cup and handle base off of a huge base right here. Okay, we use the 20-day ATR, average true range percent, to help us judge the risk in the portfolio from a volatility standpoint. What we did right there was book a profit with a higher ATR percent stock and rotate it into a lower ATR percent stock. The lower, the better. Okay, so that's one example of what we did yesterday. We're happy to manage around positions, but we're not committing new ideas to the portfolio. What we had to do yesterday was adjust our risk in precious metals. So let's go over that real quick. What you're looking at here, we're long SIL and we're long GDX through Nugget. Let's try it this way, shall we? There we go. All right, so these are two stocks right here. Now you see we had a real nice move on Monday, and it just got reversed hard. We're going to have to turn this into a yellow yesterday, okay? So we adjusted exposure a bit, but I am using end of week stops on these positions. So there's a lot of volatility during the week in precious metals. You got to live with that. That's just part of the percent R calculation, all right? So you don't want to be having your stops tripped on a normal volatility day. You just got to deal with that. Now, if we get to the end of the week and we're going below, let's say, the 50-day moving average here is an obvious stop on GDX, then we'll have to raise more cash. But yesterday, all we did was just bring down the exposure a little bit. So that's how we adjusted the portfolio there for precious metals. This morning, let's go over some of the stocks that are in our portfolio. So these aren't stocks to buy. They're stocks that we're watching and monitoring because we own them already. So here are some of the stories that are breaking on our positions right now. Doximity, stock's up 3% in the pre-market. Company has a couple of analysts that are upgrading the stock this morning, so the stock is moving a little bit higher. Newmont Mining, actually, core position for us. We didn't touch this position, didn't reduce it, just leaving it alone. Okay. The stop could be the 25-day, which is really tight, or I could use the 50, which is down here. But anyway, an analyst comes out today, stay full, and they come out and upgrade the stock to a buy, $73 target. Altria, they're lowering their rating on Altria. That was Jeffrey's call. It's actually a sell down to 50 is their target, actually underperform down to 50. But raising their target on PM, Philip Morris, interesting story, Philip Morris. I'm trying to find my way in there. That's a stock to watch. So grab a pen, piece of paper, write some of these things down so you remember. Philip Morris stock to watch. I'm trying to find my way in. It just keeps walking away. We already own Altria. We're collecting a fat dividend yield. We've owned the stock from down in here. So you're looking at like a $41 entry price for us. The stock is in the 60s, and we're collecting a yield of better than 8%. So that's a position we're not changing, even though there is a downgrade today. It doesn't really matter to me. It's a long-term capital gain we've got on this position with a fat yield. Other positions in the portfolio to look at. Nice breakout yesterday. I mean, just a blowout going on in SoFi for us. We added it right here in the green box around 15 and change. The stock's trading around 20. That is a little bit of a doji stone, so booked a bit of a profit there. And that's just managing risk, guys. That's just managing risk. All right. Alert, alert, alert. Let's go over highlighted stock of the day. We've got two of them. And let's start with Mobileye. There's a lot of news coming out on Mobileye. This is a turnaround story. You're going to see this pattern a lot when you're working with me. Okay. What I'm looking for are companies downtrends of more than a 6 to 12 month period, simple Fibonacci fan sequence. When you break that third downtrend line, it suggests that a change in trend is underway. And of course, if the trend was down, then the change in trend is up, right? And so we bought this green box here as it broke back above the 200-day moving average on Mobileye. Two things happened overnight. I'm not going to read the whole report to you. Number one, Intel owns a lot of stock, and they're doing a secondary offering of Mobileye stock. Everybody knew that. It's not a surprise. It's actually a clearing of the decks. Net, it's going to be bullish for the stock. Stock was up 12% in the aftermarket on the news of this offering, which is rare. You'd expect it to be down. But layered on top of that was that the company had pre-announced Q2 revenue that was a lot better than the street was expecting. And that layers on top of last quarter, where the company actually had a really solid quarter and kind of surprised the street. We'll take a look at that. Okay, right in here, you had an 8-cent earnings versus a loss of 7 cents, and you had an 83% increase in revenue. That was last quarter. And so the company came out last night and said, Intel's selling stock, going to do a secondary offering, stock goes down. But in the meantime, we're giving you some heads up. We're having another blowout quarter. That'll be 2 blowout quarters in a row. And we're clearing the decks here. In fact, the company is buying some of that stock from Intel. So it should be a net positive. I came in this morning. Stock was all over the place last night. It was down 5% and it was up 12%. Came in this morning. It was down 2%. Right now, the stock's flat, maybe up a couple pennies. That makes sense to me. The good news, the bad, it's not really bad news. Short term, more shares are coming out, so that could put pressure on the stock. But once that clears, I think that's going to be real bullish for Mobileye. So that's one stock to watch. We already own it in the portfolio down in here at around 17 and change. Stock's trading 18.68 right now. And the moment you've all been waiting for, the second highlighted stock of the day has to be MSOS. Everybody relax, kick back, do whatever you got to do to get in the right mind space to talk about cannabis stocks. Jump on the cannabis couch right back there. All right? I'm not going to wax poetic about different schedules, revenue growth in the overall business. Revenue growth in the overall cannabis business in the U.S. is growing at a rate higher than most businesses in their category. Take a look at where the stock is trading right now, okay? And throughout all of this, throughout all of the insanity and frustrations over the last couple of years, at the end of the day, it's interesting to note, even though the stock's down huge and nobody cares about it now, I get it. Nobody cares about it. But at the end of the day, what I look for on this desk are asymmetrical opportunities where reward just blows away the risk. And at this stage, there is such dysfunction. There is such demoralization in the investor base of cannabis stocks that I've got to start building a position. I don't know if a politician's going to make the right decision. I don't know. There's solid revenue growth. These are real businesses. We know the story. We've talked about it so long. We're not going to go over it again. All I want you to do is look at the chart. If you didn't know what the stock was and you just looked at the chart, at the very least, you would start to say to yourself, God, I got to do some research on this. What's going on here? Fibonacci fan sequence. We're not even close to that third downtrend line. This thing could flatline, just keep going sideways for a while. Totally possible. But you could see it's clear as day. The double bottom is in. Turnaround stories are something I love. I look for double bottoms, bottoming wedges, breaking of downtrends, which we got yesterday. You already know I own lottery tickets in MSOS. They go out to 2026. I'm controlling a lot of stock. I expect to lose that money. A lottery ticket, you buy it, you expect to lose money. But if it hits, you make a lot of money. That position has saved me a fortune. I did it last year. I lost money. I did the same thing last year, and I lost money in those calls. They saved me a fortune because I didn't waste my time doing anything else in the space. For a small amount of capital, I could control a lot of shares. Doing it again this year. A friend of mine in the hedge fund business shared this structure with me. It was really interesting. He worked for a guy who was running a maybe a $500 million fund. And every single year, the guy would load up on way out of the money calls on natural gas futures, heading into hurricane season. He did it every year. See, he did the math, and he understood that if he did it every year, lottery tickets on natural gas heading into hurricane season, if he did it every year for a decade, he would lose money probably 8 out of 10 years. But the 2 years that it hit, he would make so much money, it wouldn't make a difference that he lost money on lottery tickets. That's what lottery tickets are. And of course, he did it. I think he put like $10 million into this lottery ticket every year. Which means he lost 10 million, lost 10 million, lost 10 million. And then he had lottery tickets heading into Katrina, which shut down completely the Gulf of Mexico. And the lottery tickets made him a fortune that year. Paid for a decade of it. It was that always, I always found that like fascinating, that statistical decision he was making. And what I'm saying here is in MSOS, cannabis in general, I don't know what year there's going to be a reschedule, but I know it's going to happen. Look, cannabis just is, it can't be scheduled the same as heroin and cocaine on Schedule S1. Like everybody knows it. So at some point it's going to change. And that'll be a domino effect for things like 280E, for things like listing on major exchanges, banking, everything. It's going to be a domino effect. So I'm in there every year buying my lottery tickets. I don't mind. I get it. At some point, I'm going to get paid. Yesterday, I bumped up my exposure to the stock itself, MSOS, and my favorite MSO, US MSO, which is TrueLeaf. So I got a little bit of TrueLeaf, got a little bit of MSOS, and I own lottery tickets. And I'm walking away. It's risk I'm willing to take. I'm not over my skis. I don't have tons of capital to work. I got a big foot in the door if things go my way through the options market. But the capital I'm tying up is small. And then I can walk away and not talk about it. I don't want to talk about, what about this company? What about that guy? It makes no difference. A lot of guys I chat with guys on X. I see what you guys are talking about on Stock Twits. People try to compare one cannabis stock to another. Total waste of time. Okay. Total waste of time. The cart is so far in front of the horse in that conversation. It's just rolling down the hill and smashing into the rocks. It means nothing. We need reform. There'll be the initial rush. Everything will go berserk. Then we'll sift through and find out what the real companies are. MSOS is all I need. True Leaf, because I use the product. I like the company. I think it's the best positioned. So that's my one position. But just look at the stock. And this is my last thought here. It's a lot of risk. I hope you're getting that from what I'm saying. Okay? Make your own decisions. Don't listen to what I'm saying or anybody else is saying. If it fits into your risk tolerance, fits into the goal of the portfolio you run in, you want to take a position, that's totally up to you. This is proverbially not, investment advice. Go figure it out yourself. But when it comes to chart patterns, that's a clear double bottom. Stock is trying to put on a move, and this is the last thing I'll say. I will never pay up for cannabis stocks, ever. So for me, it's a now or never decision. I have to own it down here, or I can't do anything. If it takes off, the last thing you'll hear me saying on a Wednesday call like this is, let's go buy more cannabis. I'll never do it. I'll never do it. So I got to either own it down here under 3 or walk away from it. And so I've got my position, and I won't talk about adding to it. I guess you could say to me, well, what happens if it gets rescheduled? Okay, we'll have so much fun talking about that. Prices should be up huge, I guess, if they are. We'll see, right? And when the dust settles from the initial surge, and then there'll be a whole bunch of guys that sell off the initial surge because they can't believe they're finally out from underneath, whatever, right? And when that happens, that'll be months later, like a pop, and then it'll sell, and then it'll base, make a higher low, and then we can start talking about this company's better than that company based on revenue and geographics and all that stuff. I can't wait to spend time with you guys on the desk dealing with that problem, all right? So those are my thoughts for the day. Anybody got a question for me? I'm happy to answer it. If you got questions later, throw it into the comment section of the video. Tick in the old like, comment, subscribe thing. Go ahead and do that if you're not already doing that. I intend to do these Wednesday open mics. So we're going to try to do that every Wednesday. Share with you guys what we're thinking. Take any questions throughout the day. I'll be checking the comment section of this video, and I'm happy to answer it. All right. ARMR Insiders. In 6 minutes, we'll get the live stream going. Bonus track. I have a couple of trades on this morning. I added shares 8 o'clock this morning. MicroStrategy. I've been trading MicroStrategy on and off for the last couple of days. I'm trying to get on a trade that skyrockets and then hold that overnight. Bitcoin's up around 109,617 right now. We're looking for a breakout, obviously above 110, like everybody else in the world. So if we get that move, we have our largest position here is on ARK, Bitcoin, any of the Bitcoin ETFs. Doesn't make a difference. I like ARK. That's a clear cup and handle. Everyone sees it. And if it ever takes off, I want a piece of MicroStrategy, and I, with an eye on September. Do they add MicroStrategy to the S&P 500? If they do, the shorts are in big trouble. The shorts are in big trouble. They've got these pair trades on where they're short MicroStrategy, long Bitcoin. they're going to get blown out of the water if this thing gets added to the S&P 500. So I find that an interesting trade, so I keep looking for it. And the other trade I'm on this morning from early this morning is Palantir. You guys were on the desk with me yesterday. We traded it yesterday. This is a 3-minute chart you're looking at. We bought it in the green box, sold it in the pink. But I put that trade on again this morning as well. So I got both of those positions on. And if they rip higher, look, we've been trading Palantir all the way up. So we swing trade it, but I also have positions, in a portfolio or two down here at the $24, $26 area. So we're still on that whole move, but we traded all the way up. And I'm back on Palantir as well. All right, everybody, I hope you found this helpful. At the end of the day, think for yourself. Risk tolerance goals, all that kind of stuff. Be the smart money. Have a great day trading.